All right, all right. Good morning, everybody. Good evening, good afternoon. Can everyone just hear me just fine? All right, I'm just going to check my audio settings real quick just to make sure. Um, okay, okay. I think it should be fine. Okay, sound is loud and clear. Okay, and let me share my screen. One moment. Okay, here we go. All right. Okay, my screen should be visible as well. So I'll open up the chat box so I can see all your messages. Rakesh, you're saying clearly audible. Okay, welcome to the room. Welcome to the room. Okay. All right, guys. Sorry for the slight delay here. Had some technical issues, but here I am, and let's get started. So welcome to the FXStreet webinar, guys. My name is Navin Prithyani. I am a senior trader at urbanforex.com, and I'm here at FXStreet generally once a month doing premium webinars. But today is a very special webinar. We're going to do a public webinar where we're going to be going over some of the things that I normally talk about in my premium webinars, but we'll be talking about it in a little bit more in-depth detail here as well. So that way you guys have a sense of what we do. Um, how many of you guys here are actually purely Forex traders? Okay, and how many of you guys here are stock or equities traders or futures traders? Okay, Kate, you're saying hi. Hi, welcome, Kate. Rakesh, you're saying me. Okay, so purely Forex, Rakesh, for you? Forex and commodities. Okay, that's what you're saying? All right, so during these times of the market where Corona is just slowly starting to slide off some of the parts of the world that are turning off the Corona situations of all the sentiments of turning them off about the only vaccine is required, you can now travel, everything, borders are open. But on the flip side, there's a war going on, right? Well, it's a one-way war, but there is a war going on where there is a bit of fear in the market of what will that mean for all of us. Now, is there anyone in this room that can say, I know exactly how things are going to turn up, right? As traders and as investors, both, we always think in terms of risk. We never think in terms of ego and I know what's going to happen, right? So having that said, we need to always be prepared with multiple different scenarios on how we can deal with certain things and how we can protect our investment and continue to generate revenue and do well, right? Because that's the whole goal, is to thrive and not just to survive, right? So that's the whole point of it, why everyone becomes a trader. It's not just to, make a little bit of money to replace a job. That's not the reason, right? So far so good. Everyone with me so far? So let's talk about some of the things that in the current market sentiment, what can we do to stay on top of things? So let's take a look at the economic calendar. Let's start with that first real quick. Okay, today we have some interesting stuff that we need to be on top of. I'm currently out in London right now, so that is GMT +1. No, that's GMT 00. Give me a second here. Let me make that into 0. Oh, where'd it go? There we go. Okay. So we have oil news coming up very, very soon. Why is it looking like this? One second. We have crude oil inventories coming up shortly, in approximately 30 minutes or so, if I'm not mistaken. And that's going to have an impact as well. Now, oil is on everybody's mind as well today. We've just had a release from Pound as well, not too long ago. Let me just turn on the filter here. Remove the low, medium, and high. Okay. Okay, and then we got some Aussie news later on into the night. Okay, so the main point for New York right now, since New York is already open, we're going to have to deal with the oil news. The markets are going to be calm right now, and I'm currently in a few trades myself, mainly on this Euro Swiss, watching it very, very closely to see how things are going to perform. But we need to get back to the idea of, well, what does this all mean? How do we need to prepare? And let me open this up. Let's move this to the side. Okay, I'm going to draw on my screen. Okay, let me know if you guys can see the circle on my screen or the smiley face. Is it visible? Okay, yeah, perfect, perfect. Okay, so let's talk about this real quick. Now, I'm going to take it from the basics and go all the way up to advanced because it's very important that you don't enter the trading world with, how do I trade? How do I trade? How do I trade? How do I make money? Right? That is correct. Obviously, that's the end goal, right? How do I make money? How do I make money? That's on the tip of everybody's tongue. If you start your journey there, you're going to have a very turbulent and a very, very long career for a learning curve, learning how to trade. Extremely long. Rather, turn around and ask the question, how is it done? Okay? And work backwards, reverse engineer it, work backwards, and try to understand the why behind things. Why do things happen in a certain way? Why do they move? And what does that mean for me? And how do I enter accordingly? Accordingly, okay? So all the dreams and hopes and goals that you have can still be done, but at least now it can be done in a more correct fashion rather than gung-ho and let me try today and then rolling the dice. Not like that, okay? So let's start from the top here. Now, what is the basis of all trading? Not financial trading, any trading. If you buy a car and you sell a car to somebody else, that is trading. If you bought a bunk bed or you built a bunk bed and you want to sell it to somebody else in exchange for money, that is trading. What is the basis of all trading? How do you turn a profit in trading? In any trading, not just Forex, not on a chart with the green and red color. How do you do trading and turn a profit? Osman, correct. You're saying buy low, sell high. It's as simple as that. If your cost for something is X amount and you can sell it later for X amount higher, that is a successful trade. Whatever that is, if that's Forex, if that's stocks, if that's things, okay, items, okay, anything. Let's understand the basic logic of trading, okay? It is not a candlestick stuff. It's trading in general. Okay, now the next thing is if you need to buy low and sell high, okay, let's put this as low and let's put this as high. How do you know if something is low? Only if you have a knowledge of something that can go high, right? That's how we understand what is low. Without the idea of what should be high, low is not possible. Sort of like without darkness, light is not possible kind of thing, right? Or without light, darkness is not possible. It's sort of these things. It's by understanding one, you understand the other. Do we understand that? So if you know everybody is buying, let's say Apple products today, if everybody is buying it, okay, there's so much demand for it. Everybody's buying it. And then each laptop, for example, costs $2,000. Okay, it costs $2,000. But someone is giving you that laptop for $1,000. Now, because of what it's selling for and how much demand there is, you automatically understand, oh, that is pretty low. You didn't build Apple. You didn't make Apple. You don't adjust the prices for Apple, but you understand what a low is based on what is currently the situation. Does that make sense? Remember, I haven't even touched the charts yet. I am trying to understand if you understand the word trading. If we actually fix that, the whole industry will open up to you. Okay? The entire industry will open up. You need to understand what the word trading means. Okay? Shall we move on deeper? Yeah, is everything okay so far with you guys? Does all of this make sense? We're going to go in deeper now. We're going to go deeper, and then we're going to bring it to a chart. And I'm going to show you now. Use that logic into trading. It is not a strategy about moving averages and supply and demand and support resistance. None of that stuff. You need to understand trading. Okay. Shall we move further? Now, here we go. Taking it a step further. Now, if you understand what is low and what is high, the whole concept of you need to have an established trend. You need a trend, and from that trend, you need a discount to come in. Okay? Let me just put a discount to come in, right? Make it nice and simple. And when the discount comes in, for you to enter, let's put the word entry here, you must know that the trend generally wants to continue. Okay? That's how you know this is low and this is high. That's how you know that. Because you know right? Do you guys agree with that? We all are after that, especially if it's really big and then it's like 100 pips, 200 pips, 300 pips, then everyone's eyeballs becomes like cartoon eyeballs, like, whoa, so cool. But the whole reality is, how does that happen? And how do I do it regularly, consistently? Okay, that's the main key. How do I do it consistently? If I do it once, is it a fluke? If I do it twice, is it a fluke? If I do it 5 times in a row, okay, there's a bit of consistency. You can only have good luck so many times, right? So consistency is the key on this thing. All right, so to understand that you want to buy low, sell high, you must first know that there is an established trend that still wants to continue. Otherwise, what happens is you have a trend, you get a discount, you're like, cool, I'm going to buy it. Whoa, I think I got more of a discount. I'm going to buy it. Whoa, there's more discount. I'm going to buy more. Whoa, there's more discount. I'm going to buy more. Oh, I guess it's not going to go up anymore. I thought it was going up. You see? Now, the whole concept of buy low, sell high in this case failed. So it's not about buying low because you're buying low. These are all low prices. You're buying low. So the whole idea is, did you do this portion correctly? Did you identify which way it's supposed to go? So first element is identify the flow. Which way are you headed? Then identify how much discount is possible. Then you work on your entry, and then you work on exits around the highs. Okay? And as you're exiting around the highs, whatever this flow might be, then when you are looking to close your position, what do you think is happening in the markets? Everyone who sees this big green candle is saying, I want to buy it. You are simply saying, I need to sell my open position. And all the people who are chasing after it says, oh my God, I can't wait to buy this. Me too, me too, me too. You made so much money. I want to make so much money. Give it to me. You offload your risk that way. So far, so good? Yeah? So it is not an industry where it is built to kill the little guy. No, that is incorrect. That is highly, highly incorrect. It is a understanding of what the knowledge is and how does the money transfer left and right based on who is willing to take the risk at all times. That's all it is, right? So if we come with the notion of, oh, this is a mechanism for the big boy to make me poor, then, then don't get into trading if that's the fear, right? Okay. All right, so shall we go in deeper? So far, so good. You understand the 4 stages of trading, understand the trend, understand what a discount is, understand your entry, and then your exit. It has to be in that sequence. If you go deviate from that sequence, you're going to be in trouble. It must be in that order. Shall we continue? Okay, let's move on a bit more. Okay, let's move on a bit more. If any of this stuff doesn't make sense, please let me know, okay? Because I'm just going to keep going. And then if something is confusing or you want me to repeat or explain it again, feel free to ask me. It's no problem. Okay, so let's move on a little bit forward. Okay, so now in the current market, we have uncertainty. Okay, the normal trading, especially in stocks and stuff. Okay, 1 second here. Let me remove that. In normal trading, what generally happens is everyone is looking to do this, right? I want to buy, and then this should happen. Okay, which is correct. Which is correct. That is the ideal way to think about that. But this should happen is more of a stock thing, not a Forex thing. Okay, that's something to always keep in mind. Okay, Forex, you're dealing with two currency pairs. If the chart is going up, 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 that means the right side currency pair is being damaged. You think a government's going to sit back and be like, no problem. Let's just take it all the way to zero. No, they're not going to do that. In a stock, on the other hand, it could just be one stock and a launch to the upside can be feasible. It's possible because it's not hurting anybody. It's just the value of the company is going higher and higher and higher and higher. There's nothing else it's attached to. Okay, so that is more possible in a stock environment. So if you are in the Forex environment and you are under the impression of you're going to do 100 to 200 pips in a day, then that is unfortunately going to be very difficult. The career will actually end very quickly, very, very quickly. If that's what you're attracted to, the career will end very, very quickly, unfortunately. And we'll just, clear out these misconceptions at least, so that way we know, okay, well then what does that mean? How do I fix this thing and how do I get better at it? Because we know that this is not normal. So far, so good? Okay. Now, let's take it a little bit further, just a little bit further. Now, what I'll do is I'll show you this thing. As the market goes up, now we have uncertain times where prices are going up, volumes are going up, and we are in a situation of pretty much wartime, right? Even though your country where you're living at, you might not feel it, but it is affected everybody. It is affected everybody, and it will continue to have a lasting effect. So please keep that in mind when looking at the charts, that this has a global impact, especially if you're in Forex. And then Forex will obviously indirectly affect your stocks as well. All right, during these times, when the prices are going up in one direction, you are thinking of, I need to buy because everything is going up, or down, I need to sell. Let's take an example of a buy. When you want to buy in a situation where everything is going up, you need to see, I need to get a discount to buy it. I can't just keep running after it, right? Now, because we're in an uncertain time, we don't know if this buy is sustainable. Okay, that's one thing to keep in mind. Whenever you get your discount, okay, wherever that may be, and it starts to roll over and you begin to get ready to do your buys, you need to make sure that this is not the goal. You need to make sure that this and this is the goal. Purely because of the uncertain times, you want to do 90% of your business before the discount breaks out and makes new highs. You want to be done with majority of your business within that. Okay, this is something most people look down upon because it's, oh, that's not enough profit. It's not worth my time. In uncertain markets, you have to take what you can get. You have to be very, very careful because what's going to happen is if you let things run, here's the flip side of psychology that's going to kick in. If you get this type of movement, okay, you made your 5 to 10 R's today, right? Which is your massive, massive home run win that you got. What do you think is going to happen when you trade tomorrow? Are you going to be satisfied with 2R? Or are you going to push your luck and say, you know what, let me see if it's going to move again. The third trade, let me see if it's going to move again. The fourth trade, let me see if it's going to move again. You will be wrongfully understood that this is what's normal. This is not normal. Okay, so you want to get done in this process and be done with it and let it go if it goes higher. Get in on the next discount. Does that make sense? So have a look at this. Let me bring you to the charts now. Have a look at this. If I take you to, for example, CAD yen. Okay. Now CAD yen, and during these times with the oil and everything that's been going on, this non-stop upward movement from a daily chart, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 up days. Okay. Where do you get 11 up days without a single red candle? Okay, it's a very unusual situation that we're dealing with right now, that you need to understand that this is not normal. Now, if I say squint your eyes and tell me which direction is the market going, we would all say, oh, it's in an uptrend, right? But if you look very carefully, this is Forex. It doesn't go linear. It doesn't go like this ever. It goes like this, like a little snake. He climbs that wall. So to get in and hold on is never a solution in Forex. Never, 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 never. Does that make sense? So you need to learn to pull out profits from this in a different way and learn a different style of game to earn your money a lot higher, which means you want to compound your gains. Okay, that's a whole different chapter. We can get into that another time. But the way the money is made on this is the consistent short gains so you can compound it. Okay, it is not the 100, 200 pips on a single go. That will cost you a lot of money. That will cost you. Yeah, so far so good. All right. So during these times, one of the things you have to be careful of is, yeah, that's normal, but you're not on it, and that's okay. And that's okay. So I look at some more pieces. Take a look at some other ones. Let's take a look at New Zealand USD. Okay, take a look at these type of movements. Very aggressive upward movements as well. Constant, constant, constant. Take a look at Aussie Swiss. Aggressive, 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 aggressive. Very, very fast, very, very linear, one direction. Okay, USD Yen. Look at that. Non-stop, non-stop up. So this is not norm, okay? This is not norm. You need to know that. Okay, well, let's go in a bit deeper now. A bit deeper now. So what a lot of the professionals are doing right now, they're standing back. If they're not already in the buys from a early stage from here, for example, they're not going to run after this. They're on standby. Okay, they're on waiting, they're on standby, they're watching the decrease in volume as it's going up. That is another thing that we have to monitor and be like, well, what's going on with this? Why is it going so parabolic? Okay, it doesn't mean the uptrend is coming to an end. It just means I don't want to get involved in that, how it's proceeding. I need to see a little bit more stability, a little bit more norm. Okay, which is 70 to 90% of the time is what the norm is. I don't want to make money off the 20% of the time. Okay, unless you're an investor, that's different. As a trader, you're trying to make some money at a regular pace, right? Okay. All right, so the elements that you want to keep track of again is up move, discount, entry. Once you get your entry, exit. Okay, these are the 4 stages you want to keep track of. There's the move, the discount, the entry, and then the exit. Okay, when you enter, it is vital that you understand the discount is sufficient. When you enter, it is vital you know that the move is going to continue. It is vital. But simply doing an entry because all the parameters or indicators line up will not help. This must be there. Must. I cannot emphasize that enough. The understanding of the discount, is it sufficient or will I get a better price, a bit lower? Must. And then you put a bit of your energy on, okay, how do I enter? Okay, so it is, I think all of you guys here have the capability to learn this stuff and actually understand it and pull yourself forward from this, um, rather than constantly looking for, well, what's the strategy? What's the strategy? That's the word that's everyone's looking for, because we all want a shortcut movement of like, well, just give me an easy thing to do. Tell me A plus B is equal to C, and I'll just do that. What's wrong with that? I was like that too. I wanted it simple like that. Why not? And so I can follow rules, but trading is a little bit more different. There's a little bit more knowledge that has to come behind it. It can't be that simplistic where, it's like Wolf of Wall Street, you're just throwing money off of a boat. It's like, unfortunately, that's the illusionary industry, right? Okay, so let's take a look at some more of the charts here. Okay, let's take a look at New Zealand again. Now, are you guys aware of risk on and risk off type of markets? So there's something called risk on and risk off that you have to be aware of as well. Let's talk about that real quick. This comes very handy during this type of industry, uncertain times. Risk on and risk off. Okay, what risk on means is if things feel safe, people are willing to take a risk. If things are safe, they're willing to bet their money a little bit more. So during risk on environments, CAD does well, Aussie does well, New Zealand does well. Okay, these are your commodity pairs. Commodity pairs meaning they rely heavily on certain things that their economy exports. CAD is highly linked to oil, but if oil's not doing so good, there's nothing else in CAD that will make CAD survive. It's that highly dependent on its oil. Now, it doesn't affect the US so much because US is very diverse. The UK, the pound is very diverse. One industry failing will not collapse the economy. So commodity pairs are heavily reliant on one type of industry. Okay? So if that sector gets attacked, unfortunately, the entire currency starts to devaluate. Okay? Or lose its value. So you have to keep that in mind. Okay. Now, flip side is the safe havens. Safe havens. Ooh, ooh, ooh. Safe havens. We got the Japanese yen. Okay, we got the Swiss banks. And at times, US dollar acts as a safe haven as well. So what this means is when during times of danger, people turn to risk off mode. Risk off means don't take a chance. They don't put their money in these currencies. They put their money in these currencies. Okay? During times of fear, they put their money in those currencies to protect it from devaluating. They don't want to make money. They just want to make sure it doesn't lose money. It doesn't lose its value so much compared to the whole world. Does that make sense? So, the way to measure risk on, risk off environment generally, okay, you guys, anyways, all of this should be recorded so you guys can watch this again as many times as you need. The way all this stuff is recorded is people generally have a tendency to look at the VIX. Okay, if I open up the VIX here, now what this is the volatility index, okay? Now, if things, whatever the price is, whatever the norm may look like, okay, use my moving averages as the norm, for example. If prices go away from the norm, it is considered high risk. Okay, people are afraid. People are afraid. And if people are afraid, it's risk off. They're not going to take a chance on Aussie, CAD, New Zealand. They're going to put more of their monies on the yens and stuff. But if this thing starts going down, it means risk on, baby. I'm not afraid anymore. I'm not afraid. So what is this? What does this mean? What is this? What is this VIX? It's not VIX vapor rub. It's not the thing that you use to breathe better. It's like, it's a volatility S&P index. And I was like, well, okay, what does that mean? Everything just went over my head. Now, if you buy a house, okay, just to explain this to you in a very simplistic way, you buy a house. Is there a fear of getting fire? Right? If you feel summer is coming, it's getting very, very hot. I live in California. I'm afraid of fire coming in. So what do? Do you leave the house? No, you don't leave the house. But what do? You buy insurance, right? You buy insurance to protect yourself of just in case, just in case. So during times of risk, when people are worried in the market, a lot of people buy options to hedge themselves. Lots of people buy options and hedge themselves. What that means is this is telling us how many people are actually buying options. The sale of options has increased a lot. If the sale of options have increased a lot, that means the world is scared. If the world is scared, Aussie will take a hit, CAD will take a hit, New Zealand will take a hit. So now flip side of things, look at it this way. 1, 2, 3, 4, 5, 6, 7. Last 7 days, the fear is gone. They're no longer afraid. If they're no longer afraid, Aussie is back in business, New Zealand back in business, CAD back in business. Shall we have a look? CAD yen, New Zealand USD, New Zealand yen. Okay. What was the other one? Aussie. Aussie yen, Aussie dollar, or Aussie CAD is fine too. Okay. Aussie CAD is more of a, people are going to be buying both, so it's not as moving as beautifully. What about Aussie dollar? Okay, smoother, and Aussie yen. Okay. So you can see how it's somewhat correlated with your VIX as well. So it's good to know and understand about the VIX as well, because that helps you during these major uncertain times. When I say uncertain times, I'm not talking about, oh, there's some a little bit of unemployment here and there. No, this is a major event, a huge major event like Corona, major event. The Ukraine war, major event. These are major things. These are not small things to be taken lightly. So then we look at VIX and be like, how much fear is there in the market? How much are people technically buying insurance? That's how you sort of have a heads up of like, oh man, Aussie's going to get a beating. New Zealand's going to get a beating. It doesn't matter how well their economy is doing. They're going to get a beating. People are afraid they're going to remove their money from that economy. Okay? So is everything I've discussed so far sort of giving you a heads up of there's more to Forex trading than just a green bar up, a red bar down? Isn't there a lot more to it? Right? It's not as simple as, oh, well, if the green bar crosses above a 50 moving average or it goes outside a Bollinger Band, and then I need to sell it. Are you sure that's how the world is looking at it? Right? Because you need the world to get behind that thought process. Not everybody is trading the same indicators as you. Right? So you have to understand, how is the majority looking at this and how will the majority respond to it? And you can then build an opportunity and trading chance where you can turn a profit from it. So that helps you understand what's the trend. Okay, and then you can join the trend by saying, okay, well, what's a good discount? How much of a discount can I get? How's the volume? Then you do your entries, and your entries will justify your analysis. Right? Straightforward. Okay, let me just have a look at my position here on Euro Swiss. Give me a second here. Let's see what my guys are up to here. This is 2 days ago. I got into the sell on this one. And, sorry, where'd it go? Here. 2 days ago, I got into this one right around here. If I look at it from the daily, if you want to have a look. And I'm trying to take it down to here for approximately 230% of a move. So I'm still watching it very carefully. Euro Aussie, on the other hand, has gone very fast because the risk on situation is back. You can see this one's just tanked right through, but my Euro Swiss is taking its sweet time because they're no longer putting their money into Swiss as a safe haven. Okay, so Swiss is taking, the money is coming out of Swiss a little bit. So in times of these high uncertain environments, things generally run towards a risk on or risk off type of environment. They ignore all fundamentals of economic reports. Right? You've probably experienced that when Corona happened. When Corona happened, doesn't matter how good the unemployment numbers were, it's bad. Doesn't matter how good the oil barrels were, it's bad. Like when major events happen, they ignore all underlying fundamentals. Now, how many of you guys over here can say, well, fundamental, I don't like fundamentals. I just give me a chart. I can do that. Right? I hear you. I hear you. I'm like that too. But doesn't mean we have to close our minds and not be understanding and aware of things. You have to be aware of things. It helps you become better. So, we want to get away from the easy stuff and try to understand what more can I do to make my edge sharper, better, higher probabilities, and get the odds in your favor. That's what makes a real trader. That's what makes a real trader. It is not a strategy where a person just executes it with high discipline. That's the illusion, right? That's the illusion. It's not like that. Okay? So I hope everything we've discussed today made sense to you guys. FXStreet will most likely get you guys recordings whenever this is ready. This was a first public webinar I've done in a long, long time with FXStreet. I'm generally on YouTube quite regularly, but lately I've been doing only with FXStreet. I'm also here once a month with FXStreet on their premium sessions all the time. We go over live analysis in the premium section along with some educational stuff. So I hope you guys had a good time today, guys. And if there's any questions or concerns, you can always email me at navin@urbanforex.com. I'll be more than happy to help you guys in the future. Once again, thanks for being here. Until next time, guys. Cheers. Bye for now.